Can I really build wealth like this? Is this even possible for me? These were some of the thoughts that came across my mind when I started investing. I had no blueprint, no rich aunties telling me what to do. It was just me, my 401k, and taking a chance on learning how to do something differently so that I could build wealth. We're going to be talking about the fears, the doubts, the confusion, all the things that come up when you're learning something new. I've never saw anyone in my family investing growing up. This was all new to me. Yet it still did not stop me from building my first six-figure investment portfolio. I want to share what were some of the things I went through, how I felt, and how I was able to get past that so you too can keep going on this journey so that you can finally build wealth for yourself and your family. So I really did not understand investing. I learned about investing for the first time in my high school US history class. And that was all about the Great Depression and people losing money. The next introduction to investing for me was during the new hire orientation for my first corporate job. HR walked through how I could start investing $25 a paycheck. That's really where my entry point started to investing. I continued investing because I was like, okay, if this is the thing that I need to do to make sure that I have money when I retire, I just did it. Not really understanding what it meant. I didn't even look into my portfolio to see what I was investing in. I was literally just putting money into the abyss, just thinking that, okay, this is what they said, put $25 a paycheck away and I'll have a lot of money when I retire. I did that for several years. And I want to say maybe 4 years into it, when I switched to another job, that's really when I started understanding and looking into my investment portfolio within my 401k to try to understand what was I actually investing in, what did this all mean. And if you are new to investing within your 401k, I do want to share with you one of the funds that you may see within your portfolio is what they call a target date fund. Most employers will essentially, when you deposit your money into their 401k account, it will go into this target date fund, which is in alignment with the year in which you retire. The great thing about a target date fund is that the portfolio starts out more aggressive, especially when you're further away from retirement, but then it will shift more towards conservative or safer investments as you get closer to retirement. So they want to be aggressive with your investments if you have a long time horizon. So if you're in your 20s, 30s, and you have 30, 40 years towards retirement, then you are okay to invest in things that are a little bit more aggressive. But again, it's going to be based on your preference and your risk tolerance. For me, when I was going through this, I did not understand any of those things. I didn't understand any terminology with risk tolerance. All that was new to me. A lot of the fear that I had was okay, this is something that I'm trying. I want to build wealth. I want to do things differently for my family. I want to raise wealthy kids. So when I was first introduced to investing in stocks, this was outside of my employer's plan. I was putting in $25 per paycheck. I remember focusing on companies like Apple and Google and splitting it between these stocks. And the thing about investing for the first time was a lot of fear. I did not understand exactly what investing was and the benefits of investing. I was investing for maybe a year or so. I'd saved up roughly $300 and then I stopped putting money into those accounts because of compounding interest, the value of the company is increasing over time. My portfolio went from $300 up to about $700 within a year and a half. So I'm looking at them like, this is great. My money's growing. I'm not even putting anything in there. This is awesome. The fear that crept in was when the market eventually was going down and I was looking at my portfolio and I realized that the $700 now $600. So I panicked and I said, I don't want to lose my money. I sold all of my stocks within Apple and Google. Knowing now what I know about investing, I'm kicking myself because Apple is worth a lot today compared to what it was back in 2012, 2013 timeframe. And so had I kept a hold onto those stocks, obviously the value would have increased over time. When you don't understand what investing is and the purpose of being a long-term investor, you're naturally going to be fearful of what happens with the stock market. And I want to explain to you the thing for me that I learned from that experience. It is natural for the stock market to fluctuate over time, right? Shortly after I sold those stocks, guess what happened? The market rebounded and those stocks continue to grow. That process helped me understand that I needed to decide for myself, what type of investor am I? Am I an investor in this for the long term? And I want to build wealth over time. Because here's the thing, wealth is built over time. It didn't happen overnight, and it happened through consistent action. This was me investing in my employer plan. I also opened up a Roth IRA and a brokerage account and started investing there as well. I was investing consistently every single paycheck. I was putting money into the market. There was a lot of times that I questioned and asked myself, is this even possible? Can I actually build up my first 100K? There were many times where I thought maybe I should just stop investing and put my money into savings because it was very confusing. I didn't understand the full scope of things. I just knew that if I put money in there, it would go over time. But there was a lot of turbulence and fluctuations within the market, even during COVID when the market dropped. And I'm like, oh my gosh, my portfolio went down. With all the things that I was learning, especially from that first experience of investing, taking my money out, and then later the market rebounded. During that time in COVID, I said to myself, no, I'm going to keep my money in these accounts and I'm just going to keep investing and let it grow. I'm grateful that I didn't succumb to fear and confusion. Use it as an opportunity to learn more about investing. What are the ways that I can safeguard my investments? Also, understanding my time horizon, meaning at what point do I need to take this money out? The longer I keep my investments in my account, the more it has time to grow and have compound interest do its thing, right? These are some things that you want to understand as you are investing for the first time. So, if there's anything I want to share with you with the lessons and the milestones I have learned over my decade of investing, the first thing is to start where you are and with what you have. A lot of people think that, oh, I need to pay off all my debts before I invest, or oh, I need to make sure I save up $30,000 before I invest. While, yes, having your savings there so you have a cushion to rely on without having to worry about what's happening in the stock market is important. It's important to have that financial foundation, right? There are ways you can safeguard your finances while still investing and building so that you're not losing out on the time factor. Time is the most important thing when it comes to investing. But I always like to say it is never too late for you to start investing. It may take you more money the later you start investing, but it's never too late. The second thing I want you to understand is that you don't need a lot of money to start investing. I started with $25 a paycheck. I think at that point it was like 1% of my income that I was putting into my paycheck. And the thing about it was that I was increasing it over time. So the more my income increased, the more I increased my investments, what allowed me to start putting more money away. This is important because I see a lot of people do is they'll put a certain amount into their investments, but then let that ride and their income increases without increasing their investments. I'd recommend setting up a percentage amount you're investing so that as your income increases, you're also increasing the amount you're putting into your investments. The best thing to do is to get started. And with anything new, there's going to be fear and confusion. But the more you open yourself up to being a student and learning, it'll make it all worthwhile. Before you know it, you'll have your own first six figures invested, and you'll be grateful that you stayed consistent and continued moving forward. Drop in the comments to let me know what's holding you back from investing, what's getting in the way. Stay tuned to episode 3, where I'll be talking more about why investing is important for you to create options in your life and how you can create more of that freedom for yourself. And until my next video, here's to your financial freedom.